Well, hello and welcome to this special program. Markets are, of course, about 4 or 5% away from all-time highs. Will we get to all-time highs? Can the market continue to perform like it has been from the lows which were made in the end of March? That's the question. And who better to answer some of this than Raamdeo Agrawal, chairman and co-founder, Motilal Oswal Financial Services. He's with us here in our studios to boot. Raamdeo, great to have you with us here.
Good morning.
Thank you very much, sir, for making it here. What is your sense? We are in the midst of the earnings season.
Yeah.
And you're a very close watcher of earnings, and you've always believed that earnings will dictate eventually where stock prices go. So what's your reading of what we've seen so far from the fourth quarter earnings?
Yeah. So fourth quarter, we are seeing some positive surprises in terms of earnings, like Nestle's, this thing, Maruti's number, or Automotive, particularly like Bajaj Auto and all. So they were kind of a bright spots. Banks across the board, like private as well as public. So I think in my 30-40 years career, this is the best, banking system across, like whether it is the private and public. You have very robust banking system, apart from profit growth and NIM growth and all that, lowest credit cost and all. Just that every bank is capitalized. Government doesn't have to give any subvention or support, capital support to any of the banking system. So I think it is really ready to fund the Indian economy's growth. So that's one good thing I see. And last year could have been a very good year, but for the Ukraine war and all the inflationary and logistic dislocation and things like that. But now I think that seems to be subsiding. I'm visiting a lot of companies, and all of them are saying that cost is definitely on the decline. It may not be in the Q4, this quarter, that they will get to see the benefit of that. But Q1, Q2 should be much better, because all those high-cost raw material inventory, they'll all get consumed in this quarter, and next quarter onwards, you'll see the margins expanding. So I think earnings momentum is going to build slowly from here onwards. Economy is likely to grow at anywhere between 6 to 7% with 4-5% inflation. Another bright spot in the economy which is developing is the stronger rupee. If you see the rupee today, I don't know how much it's trading. Yesterday it was 81.75 or 77. So continuously there is a strength of rupee. Current account deficit is slumped in the Q4. Is it one quarter phenomena, or it is going to be repeating, because the kind of services growth we saw in last 4 quarters, is it going to continue at that pace? Even at 15-17%. I think we are in a very interesting turning point of Indian economy. If by chance our current account deficit comes to about 1% or so, which can be funded very easily. And so rupee dollar, where we keep losing 3-4% every year, which again has huge implications everywhere, interest rate, inflation, I think there we might get some relief. I mean, even if 3-4% decline comes down to a percentage or so, because then RBI will try to build a reserve about $1 trillion, $2 trillion, whatever. So I think we are in a very good sweet spot. My sense is...
Before this acceleration, many have said that there will be a deceleration. After the third quarter, earnings saw lots of downgrades.
Yeah.
But we will go through this process of more downgrades this year, because the world is slowing down, and some of it will show up here as well.
Yeah, but Indian economy has its own kind of momentum. The government has set its own momentum of 6-7%. It's the fastest growing economy. So in that context, see, if you look at even till Q3, first 3 quarters, the top line growth of corporates were like 15-16%. It's just that cost inflation, they just couldn't pass. And hence the earnings growth were very muted. Q4 is looking much better if you look at the aggregate numbers. So my sense is, going forward from here, we are going to see that at least 15-17% across the board Nifty earnings growth. There will be some spots of weakness. I believe some portion of rural economy, there the low-end discretionary spend is still pretty weak. But that always will be there, some reason or other. But I think across the board, earnings, once the earning momentums pick up, then the retail behavior, FI behavior, and if you see longer term, see, one is that we are focused on next 4 quarters and things like that. But you look at 5-10 years, this is the only large economy where you can say 5 to 7% sustained growth for 10 years. Which economy you can say? I mean, China has done what it has done, but from here onwards, China growth story still remains intact, but their stock market story is gone nowhere. So after US, it's only India where you have the opportunity of going from 3.5 trillion to 7 trillion. And if the rupee doesn't depreciate in the next 5-7 years, then you can achieve that in maybe 5-6 years, So you could be staring at 2030. At least you invest for 6-7 years, which is economy going from 3.5 to 7 trillion. I mean, you and me cannot imagine how India will look in 2030.
So the long-term picture for India is very bright, but just talking about, say, the next 12 months, do you think banks will be outperformers or market performers? Because everyone's expecting good numbers. So in a way, it's priced in. It's already outperformed. And then there is a risk of NIMs contracting. So can banks generate that alpha, which they did in the last 12 months going ahead?
I would think it will not be huge alpha. But I think because, see, there are two largest segments of the market. One is this banking. Second is IT. These two make up almost like 45-50% of the market.
Yes.
If IT in any case is slow down, so I don't expect IT to be in a terrific shape. Though in US IT is doing very well, but in India, because of their own earnings slow down, I think IT will consolidate in this year. So then only thing left is the banking. So, and banking earnings are going to be very good in this year. I don't, I mean, there are talks about NIM contracting maybe 10 bips, 20 bips or things like that. But still the top line growth will be pretty good. And operating leverage will also come. So my sense is that the current year should be a good year for banking as a whole, but I don't know how big will be the outperformance. Market performing, yes.
All right. Hi, Raamdeo. So banks are continuing to do well on their results. But what about IT? That's been the big disappointment, right? That's the other smaller pillar. But that's disappointed. Very good quality companies. But if you're buying, like you said, invest for a little longer duration. Someone who's investing for 5 years or good time to start nibbling in right now?
Yeah, clearly valuations are corrected. The good time to buy IT. See, IT story of India is going to be the story of India in the sense that we are going to write this and it is going to come back with vengeance in the sense that the growth rate which might come down from say 12-13% to maybe high single digits, 7-8%, 10%. So then something will change. When the US economy, world economy comes out of shell and they want to again build up investing in their IT and all, again we'll get orders.
So good time to start dipping into IT, you think so?
I mean, you can go stock by stock, but you have time in the sense that you can start building up your portfolio on IT also.
Preference between mid and large IT companies?
I think large mid caps.
Large mid caps about to become large
Who qualifies
caps.
under that?
Yeah, like LTI types, which are in $2-3 billion kind of a thing.
Yeah.
So they don't suffer from the lack of scale, and they also don't suffer from the large scale.
Yeah, that's very well put. So IT and banking is what we've spoken about, services, but what about the third leg, manufacturing? And that's the question that we'll put to Raamdeo. We have to take a quick commercial break here. We're back with that in just a bit.
It's okay for us to nod for everything. Because we are parrots. Yes, but you're...
By chance investing ka hoga the end.
With 5 Paisa's in-depth company information, always stay up to date.
ऐसे करते हैं trade.
Soch mat chote. Install mat. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. We're in conversation with Raamdeo Agrawal of Motilal Oswal Financial Services, and we were talking all things markets. We discussed banking, we discussed IT, and now we want to talk about manufacturing. That is a third leg, which we've been waiting for so long for it to start to fire, right? Sputtering kind of starts, but not very steady, although hopes are always very high there. But there is always some segments within the manufacturing space which are doing well. I mean, take defense, take railways over the last 2 or 3 years, which have done extremely well. What is your sense, Raamdeo?
See, the biggest part of manufacturing in India is automotive. So whether it is cars, trucks, or motorcycles, scooters, I mean, that is basic transportation, so that's where I think the high incidence of your GST and all, that kind of hinders the immediate demand pickup. But I think that demand has also picked up. Cars have done very well. I believe from March, even the two-wheelers have picked up reasonably well. I mean, let's see whether, I believe April, May is also going to be good. So I think automotive is picking up. Without automotive picking up, see, there are only two things: housing starts and your auto. So both of them are the driver of big ticket items in any household. House itself and then the car. Rest all is like a daily kharcha. So housing demand is very good. Real estate is very good. So all the components of real estate, whether cement, steel, your plywood, your paints, and whole lot of things, you know. Whatever goes into building a house, filling the house.
Building materials, the entire
building materials,
spectrum
all is, so that's one, and that's all manufacturing. So tiles and all. So I think that should pick up as we go forward, as a interest rate stabilizes or starts going down a little bit. So that's where I think bright spot is, or your automotive. Automotive has one problem: this EV versus IC. You know, that confusion is on. Who is going to transit successfully? So multiples will be in question, you know. But I think earnings will, because money is not there in EV, money is there in IC. So and transition to EV in China and Europe has become very fast, but in India it's still very slow. So cash flow will be definitely coming to, and look at the capex announcement by Maruti. They've talked about third plant coming up and fourth plant also there. So that shows a demand build up, because that's a aspirational manufacturing company.
You said housing, their real estate, I mean, contractors, builders basically. What's your view? We had the management of Loda with us recently. Of course, they were talking their book, but they basically said that we are in the second or the third year of what is going to be a longer than usual real estate upcycle. Do you believe that to be true?
Yeah, I mean, we've not made money out of any real estate, so I've not. But I think this is almost a lost decade for them. So it must last, because ultimately housing needs are there. Everybody needs house. There's so much of gap between the housing stock and demand. So clearly, and here the interest rate is very important. If by chance we can give interest rate little lower than say today, say 7.5%, 8%, if that can come down by even 100 basis point, I think this run on demand for housing, that will keep building up. And this is where again this rupee dollar is going to play a role. If you keep losing 4%, it does play into the inflation. If that becomes zero, you imagine, at least 50% of that will flow into decline of the inflation.
What about the rural market? Are you worried about the rural slowdown extending itself? Because HUL's volume growth numbers were not very inspiring this time.
So I spoke to one or two companies which are catering to, they're saying that basic demand is there, but anything called discretionary, say, that's not doing well in rural. So is it because of the high inflation? Is it because of the high taxation incidence? Is it because of just that construction transfers are not picked up fully? Because a lot of rural income is not only agriculture, it's also what transfers go from urban centers to the rural centers. So maybe trickle down may take another 6 months or so, because dislocation because of COVID was very, very deep. So I would think that it's a trickle down, and maybe another 6 months and good monsoon, I think that will do the trick.
Raamdeo, I want to ask you a couple of questions on the flows. I recall you telling us the FIs, they're having it easy getting out of the market. But when they have to come back, it's going to be painful at higher levels. So, that seems to have played out as well. In the last month or so, we've seen more buy numbers from the FIs. So how do you see the FI flows moving? And also with regard to the domestic flows, now you're getting fixed income at 7-8%. So do you think there is a chance that domestic flows cool down a little bit?
Yeah, it has definitely cooled down because all the guys who came, they've not lost money because of steadiness of the market. But they've also not made money.
Not made money, yeah, that's the point.
And the guys who went to fixed income, they didn't have to go through up and downs, and they still made 7-8%.
Yeah.
So as the market takes off from here and goes up by 20%, then again the power of equity will come back, in the sense that it is at 12% instead of 6%. So that assertion to the new set of people is yet to happen. So the index has to go from current 17,000-18,000 to more like 20,000-22,000. Whenever it happens, maybe next year, year after that, it will happen. I don't have any doubts. So when that happens, then people will realize that here, this is where the money is made.
Yeah.
So, and real fun will be when something happens and the earnings growth picks up to 20%. Then you see rupee stable and earnings growth is 20%. And P multiple is also 20. Because next year, talking about 900, anywhere between 25 to 50. So then you are at 18,000. So you are talking about less than 20 P for 24.
Yes.
Which is kind of reasonable. So then FIs also pile.
Yeah.
So a lot of things are converging into what can happen in next 1 year. So that's what we're hopeful.
Raamdeo, let's get to the earnings at Motilal Oswal.
Yes.
They've been a little subdued.
Yes.
I mean, if you look at asset management, asset and wealth management, capital markets, numbers have been on a year-on-year basis subdued. Home finance is the one which seems to be
Bright spot.
the bright spot.
Yeah.
Tell us, what are the plans?
So of all the businesses, we had a bit of problem in last 2-3 years in housing finance. Now with all the, what is happening to the entire financial sector, this has also picked up, and now we are out of the woods, I would say. There is a 50-60% growth in the profits, and it is looking good in the years ahead. So I think that is one achievement. The rest of the businesses are stable. Actually, Motilal Oswal is a twin engine. One is the operating business, another is the investment portfolio. Investment portfolio is 100% equity. So last year when the market was flat, broadly portfolio has remained stable. So there is no accrual because of that, which is very 60-70% of the balance sheet is there. Whereas the earning side has done 4-5% higher only, all put together. So clearly my net worth has grown about 12 to 15% in the current year. From 5,600 has gone to 6,250. And the moment the second engine also works in next year or year after, then you will see I think last 8 years compounded growth in the net worth has been more like 24-25%. So I think those rates will come back, but current year is not matching with that.
All right, Raamdeo, quick final question then on the index itself. With a 1-year horizon, will we be at 19,500, 16,500, or do you think we consolidate at these levels?
Will be higher. I don't know how higher.
That's a safe answer.
I mean, he also mentioned that only 700 points higher. No,
1,500 points higher, 1,500 points lower. So which one do you want to go for? 1,500 higher?
I would think so, because see, once 1 year is negative, then you have longer you underperform, that 12% is getting accumulated. So I would think 15-17% it is ready for a move.
Gains accumulate.
Gains.
Then they happen.
It's like a what do you call cumulative redeemable preference shares. So if you don't pay now, you are going to get it later.
On the investment book at Motilal, I mean, anything new you've added? Anything?
No, it's same. I mean, public and private, some kind of a split is there. So that continues.
And the public market side, anything? Because you keep evaluating opportunities.
Yeah. No, nothing direct. Yeah, so it's all going into. In fact, last year accretion to the investment portfolio is low because of all these regulatory changes. That is taking a lot of free cash flow from the operating side into the businesses.
These new age businesses, Raamdeo, you had a strong view. I mean, things like Zomato, etc. How's the view panning now? Because
I think worst is behind.
Yeah.
Worst is behind. I mean, we have seen peak of pessimism, and I think some kind of I would not say optimism, but some kind of sensibility is prevailing, and even managements are going for faster road to profit, and they are struggling to. They're not used to showing profit, so they have to work extra hard to change the track, and instead of losing money, I mean, at a cost of a little bit of growth, they have to make the model a little more profitable.
Absolutely. It's a pleasure speaking with you as always. Thank you very much for dropping by, and we hope we can make it a regular feature. Thanks very much. Well, that's Raamdeo Agrawal, Chief at Motilal Oswal Financial Services, on all things markets, and of course, earnings for the fourth quarter from the company as well. It's a goodbye from all of us here, Reema, Nigel, me, and the entire team on Bazaar. Thanks very much for watching. More coming up in just a bit.